I'm Ian Harris. I'm CEO and president of Outcrop Silver, where we have our flagship project, Santa Ana in Colombia. It's one of the highest grade silver projects in the world, and a true primary silver project with 75% of the resource as silver.
We always start with the money shot. Can you show us something?
Well, let me explain it first. Let me build up the excitement a little bit. But we have a very high-grade project. We've done some metallurgical work that shows a very high recovery by flotation only because it's silver sulfide, so creates a very high-grade concentrate. And over about the last 6 months, I'm a mining engineer, I've been telling you can make silver directly from this concentrate. It can be done. And that's important because if you sell silver as a lead concentrate or a zinc concentrate, you might only get paid 60, 70% of the silver value. But if you get it into doré, you're going to get paid 98, 99%. So we actually took that metallurgical test work and smelted it to say it can be done. And this is the silver from that concentrate.
Come on.
Yeah.
Let's.
So we produce silver directly from a flotation concentrate. It's important because you get the payable, but we also produce silver without cyanide, right? So we can produce doré at site. It's something we could do on that project, and you can produce doré at site without cyanide. So obviously from an environmental and permitting perspective, it's also a big step. But I like having tangible things that can say it can be done, and here it is, right? And it could be done.
So I guess I don't need the so what bit now, because like your market cap, what? 30?
About 30.
30 something, right. Okay, 30,
almost 40.
30, 40, right? So it's like, it's been a difficult kind of silver environment out there for all companies, producers, developers, explorers, everyone's in the same boat. And I always say to people, like, the name of the game right now seems to be like, you got to be at the table to play the game. You got to stay in the game. That proves to people that you are going to be able to do it. The recoveries are good. The payables, more importantly, are good. And it's a question of evolving the economics margin on this thing, right? But we're some ways from that. But that's a proof point.
That's right.
Right? So what do you do now?
So one of the things I say when you have high grade, high recovery, high payable, it really delinks the project from scale. It doesn't require that economics of scale to be able to have the margin. So it's really not our primary strategy. Our primary strategy is different, but our secondary strategy is also taking a very small pilot scale project and get it into production. And it does a couple things. It's the same way. Can you permit a mine in Colombia? There it is right there. Can you produce silver from it? Yes, we can produce it. I like to have a tangible demonstration that it can be done. But it's also a strategy that's built some of the biggest mines in Colombia. They started small. They're narrow veins, and they start with one, and you have 3 faces, and you have 4 faces, and you have next thing you know, you have 50 faces, and you're producing 200,000 gold ounces a year, like Boritica or Marmato. It's what they did. They started smaller and grew. But it shows a tangible way that you can get into production, but even at a very small scale to be able to demonstrate you can do it profitably, right? So again, it de-risks the project in a large way, and so it's something tangible that we are working on. The primary way that we see of creating value, however, is we have 37 million ounces really in one little area of the project, and to say, how do you create value with one drill turning, and you want to get the biggest bang for your buck, is to be able to demonstrate. So we're going to be taking large step outs. We changed drill contractor, but we took the time to get in the water lines, finish some negotiations of access, et cetera, to take big step outs. So, to be able to do, because we have a 20-kilometer corridor, to take bigger step outs to say, that is now a discovery, that is now a discovery, it will be converted into resource, but to be able to show a pathway that we can get to that 100 million ounce mark, there's a way to get there, right? Without actually constantly just building up a slow resource, but demonstrating that pathway. And so that's what we're doing now. So those are the 2 major areas where we think we can create real value for our shareholders, even in this market.
Right, and look, there's all sorts of conversations happen in difficult markets. People, are a bit more reflective and a little bit more critical. And one of the ones I heard at a big party over the past couple of weeks was like, the explorer model's broken.
Yeah.
Right? As in, money's disappeared. It's hard to get. it's expensive when you do get it, and it doesn't necessarily solve your problems because there's a whole cost environment out there which is just changed the landscape as well. So raising money constantly for drilling is one thing, which is, I think, the broken bit. The cost structure of doing something when you maybe can get to a point where you can make a financial investment decision, that's a whole other world of hurt and pain as well. Let's go back to the beginning of the conversation where you talk about the strategy you're employing in terms of, like, right, we're going to show route to market, we've got a proof of concept, that little shiny silver object on the top, proof of concept, and it may not necessarily be as efficient, because that's what people in the past, we drill to the edge of the envelope because we want the scale, because we want the maximum efficiencies. But in a market like that, I guess those conversations become a little bit moot in the sense of, well, I need to stay alive because there's no money out there. I've got to drive some revenue. I think we found a way of doing that, and then we can scale up from there. Why did you come to that conclusion?
So, first of all, I'm a mining engineer. I have 25 years in the industry, and so I come with a different perspective anyways. So maybe the exploration model is broken if people just want to drill, and you get the market value up, and then but the name of the game is building mines. That's what we're doing this investment for, right? If you're researching a drug and you're going through all these trials and stuff, the idea is to eventually sell a drug, right? I mean, and sometimes we miss that. So there are projects out there that even in today's market, they are creating value through exploration. They're exceptional. And so we're really fortunate with Santa Ana because of the grade. It still gets significant attention on the project. So we believe we can still create value, but at the same time, let's put it a couple notches up by demonstrating and de-risking the project at the same time. Not everybody can build a small-scale mine and make it profitably. Some commodities require bigger projects. If it's a copper porphyry, you're not going to do a little teeny copper porphyry.
Right.
But because we have such high grade, high recoveries, and high payable, it is a viable model for us. And so I think that by hitting it kind of on a 1-2 punch, we can still create value in this market. I think that we have one of the more exceptional projects that still gets attention in this market. And then the other big one is you're also hoping, right, that silver is been in supply-demand crunch now for 3 years, that it can only be held down so long. And as one of the very few companies out there that is a true silver company with 75% of our resource value in silver, we are also very much leveraged to any sort of shift in silver price.
Right. Okay. Let's have another conversation about what the hell's going on in the silver market another time. Right. I get it. Okay. Back to this thing. So I'm intrigued by someone in mining saying, "Hey, we're here to make money," because that's unusual for a junior, right? So which is great, and it's a long time coming because you wouldn't get away with that in any other sector, and the public markets are much worse than that, right? In the sense that they seem to think that they can ride their own kind of tickets. They can't. Those days are gone. But for you, $30 million company, you've shown that you can do it, and you can build mines, but it's of a scale. You've got to be careful that this doesn't come across as some mom and pop operation, right?
Very true.
I appreciate the cautious allocation of capital in this market, but at the same time, you don't want to be mislabeled, right?
That is absolutely true.
So how do we go forward?
Stay as small as possible.
Right.
I actually had a board meeting, and I said, we want to do a project about this size, very, very small. We're talking a ball mill a little bit bigger than this table. It's an exaggeration, but we were thinking under 40 tons per day. It's really small. And they go, why not bigger? And I go, because we don't want to be thought of as a producer. It's really a pilot demonstration project. It's a demonstration, right? Because the truth is we need to continue to increase the resource, but it demonstrates there is a pathway to get into production. It is, and it proves that it works, and it proves you can recover it, and it proves you can produce the silver, and you can get it permitted, et cetera, right? So, but you don't want to be labeled as a producer, because then I'm going to get measured by EBITDA on the plant. So you got to get bigger and bigger and bigger. But it does give us the advantage that eventually we can scale it if we wanted to, right? When we're ready to make that switch, it's easier and quicker to be able to make that switch. And I think if you look back at the last silver boom, when some of the greatest companies, the silver companies were built, right? It was a hopscotch building off of, and there was some acquiring, but it was to also get into production. Production was key. And I think if we look around the table too, being able to demonstrate we can get into production and it can be scaled, makes us one of the more interesting targets or one of the more interesting acquirers, right? Because that's also something. And then in a market like this, you can create more money through M&A than trying to actually discover it, right? So it does create opportunities in a market like this.
I think that model's kind of broken too. Mergers of equals don't create, it doesn't go well. I haven't seen anything go too well of recent times.
I haven't seen any happen recently, though. That's the other part of the story. Right?
It's not pretty. It's not pretty. Okay, so I understand sort of the logic, et cetera, here. So in terms of moving to a point where you say, whether you call it a pilot plant, which is kind of like base metal type thing, we've got a
pilot would be when you have to prove your metallurgy.
That's great.
But it's a very similar scale, actually.
But again, in terms of the kind of revenue profile there as well, it may help sort of cover your G&A, right?
That's correct.
It comes back to that, like, it's just, let's stay in the game here until the silver market does its thing, or the equity market kind of makes some sort of recovery. And again, there's nothing wrong with that. But what are the barriers to selling your produce in the market? Do you need permits or licenses? Any kind of hold-up that could cause you problems?
So we obviously have to go through a permitting process, but we're going through a permitting process as a small-scale miner. Like it's the nice thing, and it's the advantage. And also... I've been living in South America now for 15 of my 25 years, and I know that...
You're 25 years old. Amazing.
Oh, actually, 49. and I'm holding off. I'm slowing down time because I don't want to get one more year on me. But anyway,
25 years experience.
25 of my years, 15 of those have been living in South America.
Good.
And so if you look at technical aspects or environmental aspects, all these different aspects of a project that, are barriers... There's only one real super big barrier, and it's social, right? And projects will not go forward. Doesn't matter. It's the best, cleanest, nicest, etc. It will not move forward if you have not developed those relationships with your local community. Mm-hmm. Right? So that's another reason for doing it, right? Because it's demonstratable. You can show how it works, but you can also create training and capacity building so that one day when you have the people are now ready to take advantage of that opportunity. Right. So that's another aspect of doing it. But let me talk hypothetically to try and not get off sides. Hypothetically, a 40 ton per day mill, which is very small, you could probably go to get it off the shelf out of China, right? And maybe the whole price of it installed is less than $1 million, right? Then there's some civil work, there's some other stuff, some working capital, etc. But it's not a big price tag either. But 40 tons per day on a project like of a similar grade to Santa Ana could produce $4 or $5 million in EBITDA. So it is a significant, in a market where access to capital is very expensive, it is a huge luxury to be able to have a part of your stream just covered, that you're not always diluting your shareholders every time because you need to raise money every single year. And so I like the model. You've identified one of the traps, which is you get mislabeled, and that's another reason why we want to keep it as small as possible, right? And it's truly just a pilot, it's demonstration, it's not real production, right? But it does have some significant advantages to it, right?
Yeah, look, there's so many variables, right? You play with the what's thrown and put in front of you, right? So I don't have a problem with any of that, but it's certainly not in a market where we're seeing, gold companies become lithium companies, become nickel companies, or people haven't made a discovery, so therefore we're now a prospect generator. We're not we're not an explorer anymore. Because people have to change and adapt. And again, I don't have a problem with that. I just think it's just more of the same, though, with a slightly different label sometimes. And chance of success from a team who have to flip-flop from one thing to the other is not good. But if you're quite adamant and strong and powerful about the way that you portray what it is that you're trying to be, and you're saying, look, we're not a producer, we're just proving up that we can produce because the metal in the ground is amenable to that, the cost of doing so is amenable to that. I don't have a problem with that, but it's like at some point it's got to stop, right? It's got that's got to stop, or you will get labelled because it's been 5 years. it's an old story. We've moved on to something else. So
Well, that is
other
the
levers?
secondary strategy, because the primary strategy is
Yeah.
we're still on a very small portion of an overall district.
Right, so let's
it's to
talk
look
about
at
that.
it. And so
Then
at the
any
end of the day,
growth in here?
we have a lot to do to explore. So it's not like
Good.
we're going to just get to a point one day and we're like, oh my God, we can't keep fooling people, right? There's a real project to be built here at Santa Ana. We're
Okay.
at 39 million ounces, and we can see a pathway to multiply that resource by big jumps, right? And that can be the work. So while that is the number one main strategy, but once you get to a point, and for me, it is when you get over the 100 million ounce mark. When you get over the 100 million ounce mark, right, each additional ounce in the ground doesn't really create the same amount of value. That's like an inflection point in the silver industry. And that's when you start going to design and build your project, right? So that's our goal. And I don't really like the labeling anyways, because it implies that there's different models, right? There's only one model, and you got to build a mine, right? So I get frustrated as a mining engineer when I see some projects and they have valuations, they're drilling and putting out something, you're like, but that will never be a mine. It just won't. So what are we doing it for? So I think always the model has to be is, how do you get a project to eventually become a mine? Right? That is the purpose that we're here for. And I like being involved in projects. I was senior VP of Corriente, and we started the construction of the first industrial scale mine in the history of Ecuador. I like building mines. I like getting a project to say that baby is now born, right? And that should be the purpose of what we're doing. So we're creating a pathway of continuing to explore, but also to continue to de-risk the project by demonstrating pathways. And so if I said to you, okay, we have a 37 million ounces, and we have a pathway to get to 100, and we also can demonstrate that that could be converted into a profitable mine. And that should create value, period, right? Because I'm showing and demonstrating a way, if it worked at that size, why wouldn't it work at a bigger size, right? Because that going from a project to building a mine is a very risky step, right? A lot has to be proven. So I think we can create significant value through those two strategies working in parallel.
Okay, so talk to me a little bit about the market, because we've had some Mexican miners through, and silver miners, and explorers, pretty clear. Explorers. Now, they've been hit because of Mexico. They're going through an election year this year. The existing government has been a little bit, let's say, excitable with some of the headlines that come out. And it causes some level of doubt in the investors' minds. And for some foreign direct investment is a little bit hands-off at the moment there. On top of the silver woes, because there's a lot of silver byproduct out there as well, I suspect. So we need some pricing discovery this year. I hope it comes this year. I expect it to come this year. So let's talk about jurisdictional risk in that sense. Mexico, I think, is still for me a difficult one. Elections decided and new government in place at the end of the year. So this 2024, I don't know. Countries in South America, silver producers, precious metal producers more broadly, have they got a better chance than someone like Mexico? Is it a better place for money, or is it just silver price dependent?
So there are some significant advantages, is that Mexico is not an inexpensive place.
And by the way, I drag Mexico down into South America, so I should say this. I know it's not South America, but in the sense that it's a kind of perceived sort of Latin influence and sort of some of that more socialist headline-grabbing stuff, it is kind of dragged down as the same pot. So I want to be clear about that one.
Yeah, that's true. Because you experience, it doesn't matter what reality is, it's what perception is. And many investors don't have the time to investigate every single one of the countries, so one headline can bring down everyone. But Colombia has some significant advantages. Its cost base is probably half of what it would be in Mexico, which is a big advantage. It's also a smaller population. And that's important for one reason, because today the biggest two industries in Colombia are oil and coal. Most people don't realize it's the fifth largest coal producer in the world, right? And those are two commodities that, I don't know when they're going to end, but they will end, right? We're coming to the end of that dependence on carbon-based energy, right? So it's happening. So Colombia depends on it. So it needs to switch into an additional market. So there is a big push. It's even in the strategic plan of the country to focus on strategic metals that are important in the energy transition and the decarbonization of the world's economies. And so that is, I think, really good for Colombia. Now, if I look at all of South America, since I've spent so much time, I live in Medellin. I'm actually fluent in Spanish, so I enjoy it and seeing it on the ground level, right? There is an interesting switch going on. If you look down at Argentina, you had a president who was elected on a platform that says, we got too much government, we're doing too much stuff, and we need to create money. We need businesses. We need to drive the economy. And I haven't seen that in my many, many years. Since 1999 was when I first went down to South America. Never seen a politician get elected on that kind of platform. So you're seeing a swing back. And I think that's important. And I think it's at the same time when we're in a depressed market, but you're also seeing on the front cover of The Economist the importance of strategic metals. So it is getting out, that news is getting out, that people are going to wake up. I think many times you go and have a conversation with somebody on the street and you go, hey, what do you do? I work in mining. And they go, there's still mining? It still exists? And you go, really? Where do you think all this stuff comes from? Of course there's mining still going on. So there's going to be a little bit of a wake-up call where people can come back and realize that this is important. And it's important for the planet. And so that swing will come. So I think there's a lot of good dynamics going on right now. It's not a good spot, but it's a huge opportunity.
Okay, so we're saying the Colombian government pro-mining, clearly. It's a big income. GDP is a big part of that. But are you any better than other places? If I'm a contrarian investor, for some reason I'm going, silver's thing I must lay my hands on, and I want to go down the equities route as part of the solution, physical and ETFs and all around, but I'm going to bet on some equities. Why is Colombia any better than the rest?
The number one easiest way to answer that is the cost base. Right. It is less expensive to operate in Colombia, and they have experienced miners in this exact type of mining. And it's a very much a business-friendly, because I've lived in 7 different South American countries. Number one, easiest to set up a company, set up a bank account, operate. It's efficient. My banking app in Colombia is better than my one in the United States. Okay. It's made to make businesses efficient. And that's a huge advantage, right, to working in Colombia.
Right, okay. And then we've got to finish off on the company again. So we understand the business, but I always think it's really important to understand the company's plan in whatever macro environment we find ourselves in, whatever economic environment we find ourselves. Because I need to believe that you are more likely to succeed than the next guy. Because there's a bunch of people saying, oh, we're going to produce silver. You know, and I know that most of them won't. So there is that. So I'm buying into someone who's proven. Here we go. We've got to hold that again, haven't we? We're just going to hold that again.
It was just from the concentrate that we produced for metallurgical test work. So
we've proven we can do it. We are conscious of the economics environment we're in now, so we're going to do it at the right pace, a responsible pace, in this new reality of ours, and that you're going to come out the other side producing lots more of this.
That's correct.
That's what I'm buying into.
That's correct.
Okay, so we should have just held this up, shouldn't we?
Should have what?
Just held this up.
Yeah.
That's kind of it, isn't it? That is the money shot.
Yeah,
right?
Because that is, the truth is, hey, how are you going to, this, can you, here we go. It's a proof of concept, but it's a much powerful message. So if you look around the landscape, right, and I say, well, what's important to have a mine that operates, right? You're not going to build a mine to lose money, right? So you go, okay, well, where does that equation start, right? You have a price. Well, everybody has the same price. I don't get a better silver price than everybody else gets. So in that, we're all even, right? So then you go, what makes a better project? Well, grade's pretty important, because more grade, more money for each ton you pull out of the ground, you're going to get paid for. So we're one of the highest grade projects. And on a silver basis, it's absolutely one of the highest grade projects in the world, right? And then you go, okay, well, then you take it out of the ground, and then how much do you get out of that rock? And that's recovery. So we have a 93% recovery, flotation only, and we haven't even added a gravity portion. So we're going to do gravity test work with flotation, and I think we're even going to get a better recovery. And they go, okay, now you've got it in a concentrate. You have it as stuff. How much you get paid for that? And again, if you're in zinc concentrate or you're selling a sulfide concentrate, sometimes you only get paid 60% of your silver content. If you actually get paid. So if I have $1 worth of silver, I only get 60 cents. But if you can turn it into doré, you're going to get paid 98 to 99%. And so that makes Santa Ana, gives it a leg up big time. And then I add Colombia is one of the cheaper jurisdictions to work in the world. And that's another added advantage. So you put all these things together, it's got a much higher chance to get to that finish line, right?
Yeah.
We're not just investing money to one day, it's going to hit a brick wall. We can get this project across the finish line. And I think that's a major advantage for investors, that this will be a project that continues. It's not going to just create value next year. It has the ability to create value over a long period.
It's interesting. I say we talk about this with Marilyn a lot, which is 1 in 3,000 explorers will make a discovery, an economic discovery. Actually, there's a difference between discovery and economic discovery. You find mineralization everywhere, and very few of those actually go on to be successful economic mines. Right, so it's a numbers game. This junior space is a numbers game, and if you're saying to me, well, look, we've kind of proven, we've got a proof point for the end game here, which is producing it. So in some way, it may be a slightly longer ride in the sense that it's a crappy market. We're going to be good arbiters of how to spend money and how we allocate that capital between now and that endpoint where we've got a scaled up project for you. But at least we've de-risked a lot of the moving parts between now and then in that journey. But you've got to do that scaling. You will have to raise some money. You will have to do that.
There's a saying that if a man has a toolbox and it's only got a hammer in it, he sees every problem as a nail, right? And so I'm going to say this as nicely as possible. Right? There's a model out there that people only think the only way you can make money is by making a discovery or by getting drill results out, right? So if they see all problems as that is the problem, then that's the way they're going to focus. And that might be one of the reasons why we don't see as many projects actually become future mines, right? I like to be involved and I like working on projects where I can see a pathway that it can become a mine. I need it to have that higher chance that it has a realistic opportunity to become a mine. And because that's where you really, truly create value. Otherwise, it's more like you might as well just play roulette in Las Vegas. It's kind of a hot, flash in the pan kind of moment. But if you want to really, truly create value over time, you need to be able to see that end game. It has to really be a plausible way to get there.
Okay, it's an unusual route, but I think, as I say, it's a much more de-risked route to get to the same end point that people are all chasing. So appreciate your time today, Ian.
Thank you.
A lot of meetings this week. We're PDAC, so we're happening out there.
Yeah. The schedule is pretty packed.
Good. Don't lose that.
I won't.